The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 30th. Terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. Let your fingers do the walking. You got to love that commercial. That's right. All you need to do is send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 64 points, 26,059 is the print, about 0.25% to the downside. S&P's off 4. She's trading at 2909. NASDAQ 100 up 23 points. That's 0.3% to the upside, 76.83. Russell's up 2. Semis are down 2. Trannies are up 56. Spot volatility index up 43 pennies. That's 3.5% to the upside. Gold's off $5. Silver down 20 cents. Light sweet crude trading out at 70.02. That's 51 cents to the upside. Lead the charge to the upside, it is Amazon up $23, trade out at 2021. Signet Jewelers up 26% or $14. She's trading at about 68.85. So the downside, Mercado Libre is the big loser, down 7.5%, $28. NetEase off $14, that's 7%. PVH Corp down 13. So certainly there are things to look at. Of course, I want to look at what you want to look at. We've got 3 requests so far. Let's go to them in order. The first request coming from the Tiger's Den, and that is from John in the Tiger's Den, who wants to take a look at the NDX 100. So it says, kindly request showing the NDX daily and weekly with your peak counts and your projection targets. So let's do that. Let's first take a look at these different wave counts out here. Let's start with the weekly time frame. And what I can share with you on this chart here for the weekly time frame, John, I'm beginning with the swing point from the week of July 7, 2017. And if I just simply do my wave counts out here, we'll see that the high that came in on March 16th, which was kind of a significant high, made it to that 7th wave move on a weekly time frame, and then we saw that decline. So for me, even though it's a little bit lower low here on February 9th, that low, for me, for my counts, from weekly perspective, I begin with April 6, 2018 out there and says we are in wave count number 5. Now, I can just simply pull it back here just to show you where we'd be if we use the February 9th level. That would be wave number 4. So let's go with it's either 4 or 5 out there. I'm thinking 5 just because you and I like that way that the markets sing in the key of G, wave number 7. And we know when that gets taken out, that recycles to the upside. That is the mark, in this case here, if it's the upside, a strong bullish move out here. Now, from the daily standpoint, and I've just got a clean chart here. We're just taking a look at wave counts as an example. Just to start from scratch out here, it'd be pretty easy. This is for me, I just simply will start from this high on March 13th, and I know I'm grabbing the right low out here. That low to begin with, we're going to April 2nd. Voila, we get to wave number 7 out here, and that is on June 20th. The market goes ahead and moves to the downside. So for me, it's pretty easy with regard to where it is that I'm going to start the counts to the downside. There we are. Now, I guess two different ways to take a look at it. On a daily basis, either in wave number 6 or because it did have a decline out here. So that declined, and I can see which swing point to use, but I'll just simply use that's the July 30th. So I guess the two alternative counts you can come up with is either 6 or 2 out there. So that's what I see when I just take a look at plain vanilla. Hey, where are we at inside of the wave count system? The second question is, what are our price projection targets? That is a whole different story out here. And for that story, what we're going to do is we're going to turn to, what are we going to turn to first? Let's turn to just simply the primary trading range boundary lines out here. Just the monthly? No, I've got the monthly, the weekly, and the daily out here. So let's take a look at the monthly horizontal trading range boundary lines. These are monthly chart is what you and I are looking at right now. This says the next level out here is about 78.18. You're trading at 76.84. These areas can be, don't have to be, can be areas of resistance. Now you're going to see the little dashed lines out here. Well, the large dashed lines and the small little dotted lines, and then the solid lines out there. The solid lines are supposed to be stronger levels of support or resistance inside kind of this vertical-ish style market out here. Maybe not so much, but with regard to its next price projection level, monthly basis, 78.18 would be the number. If we look at the weekly set of horizontal trading ranges, these are the green levels out here. You're going to see that it's right now at about the midpoint, 77.01. We're at 76.84. If you get above that level, that says 80.67. If we take a look at the daily horizontal trading ranges out here, what this is saying is about 77.61, as well as a potential level of resistance. Folks, I am not saying go short the market. We're just identifying levels of support or potential levels of support or resistance out there. It's a whole different animal. With regard to what my real price targets are, this is the bottom panel of the screen out here. Price is already above the 1-to-1 A to B equals CD on a quarterly basis. This is coming off of the 2009 level out here. Price is broken through a consolidation level. Did this back in 2000, it's right here. In essence, did it in 2017, January 2017. Did it with conviction. The measured move takes us up into the 86-ish level, 8,600 level. And I'm not saying that that is where price is going to. And in fact, let me just be equivocal with regard to what it is I am saying. Price is not going to stop there. That is not going to be the end of the run in the NASDAQ 100 up to the 8,600 level out there. So really, those are my price projections. Those are my wave counts when I take a look at the NDX 100. Now, that doesn't mean that in the short run, we're not going to see some type of pullback or retracement out there. Blasphemy, you say. I say no. We got to take a look at these different charts, different time frames, get a look at their different messages out here. And if we take a look at the NASDAQ 100 right now, it's struggling between the bulls and the bears. We've seen two little crossovers so far in the last couple of hours. This is a 60-minute time frame chart out here. And we can see that as we came into the session at about 9 o'clock this morning, we had a little bearish crossover. But as we came onto the air, well, I guess this was about 11 o'clock. We weren't really coming on the air. We've got the bullish crossover as well. So there is a tug of war going on right now. The bears are trying to exert their influence as we go into the holiday. Steve Rhodes with TFNN. You've got my long-term targets. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no-questions-asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So Ruby in the Tiger's Den, she wants me to look at my favorite Guess Who tune out there, the one put together by Randy Bachman and Burton Cummings. You know that song, No Sugar Tonight, and New Mother Nature. Yeah, they combined two songs. They were both sung, they were both written in the exact same key out there. They combined them, turned out to be really one of their best tunes out there. My favorite version of that song, by the way, that is the one where Burton Cummings produced a cappella album, and I think it's just one of the best ones out there. But in any event, with regard to taking a look at sugar right now, and that's what we're looking at. We're looking at the October contract, and looks like Ruby made some money on sugar today. Sold a part of her position. And you just want me to take a look at it. Ruby, can you look at so I'm done. I'm done looking at it. Nice trade. Now I know what you're asking. You're kind of saying, hey, where's it headed to? So we've got green shoots on the 60-minute, the 240-minute, meaning prices above resistance, in this case here, the tops of those boxes. The same is true with regard to the daily time frame right now. So your price target, although at the end of this week, we can see that the weekly candle right now is orange, Ruby. That's going to give you and I a new weekly market, or should give us a new weekly profile come Sunday night, Monday morning out here. Right now, the price target would be the bottom of its weekly profile, 1144. It's kind of in line. I think you and I looked at this a few days ago, and the price target that we looked at was the high from August 9th out there. It's a little green dashed line. That is a Tom DeMark setup trend line. We can see that when sugar bottomed, it did that with a 9 count to the downside. That, in essence, was on the trading day of August 21st. Was that the ultimate of bottoms? No, there was a little bit of a spike to the downside that took place on August 22nd. So at this stage here, trade above profiles, your target, which, by the way, the high of August 9th is $11 and a penny. And your note says you're going to try to scale out at about the $11 price level. So there's nothing here in the charts to suggest to your eye that that shouldn't be what you would anticipate at this moment in time. You certainly want to see price continue to close above the top of that profile out there. That's at the 1049 level in order to make that more of a likelihood. So I hope that helps you out. And happy to have reminisced with you for just a moment. Robert B. writes in, and Robert B. writes in radio show question August 30th. Hi, Steve. I've got a couple of questions regarding gold. All righty. Last Friday, you talked about gold forming a bottoming pattern. I did. So let me just put that bottoming pattern on the screen. Continue to read. If gold has bottomed and is on its way back up, would it be unusual to see it pulling again in all major currencies? We saw it pull back in major currencies this week. Okay, so, and then there's another question. If gold has bottom, wouldn't we normally see a V bottom followed by several consecutive days of positive price action? Who's to say we haven't seen a V bottom? That's the first thing I'll say. I see a nice low out here. I can draw a letter V in here. How do I do that with this? Here's my letter V. Here's the V. It's in blue, and then here's the other part of the V. So yeah, I'm going to say that with regard to, if your requirement is, it's not my requirement, but if it's your requirement to see a V, then I say we've got that in place as we speak right now. So that's the first thing. But, you know, with regard to gold making a bottom, my contention is that when these patterns are present, again, we're looking at the continuous contract for gold out here. You can take a look at the prior bottoms out here. And, you know, who's to say that these really form Vs either, Robert? And Fink, take a look at the one back in December of 2015. It would have taken a long time to create that V out there. So let's just take a look at the pattern. Let's look at the pattern that has distinguished significant viable bottom events inside of gold. And it is the Rhodes Momentum Indicator signal that is out there. And it has been present. It was present as we went into that push lower in price. And until that low gets taken out, or until we see price close below some level of support out here, I'm going to go with a bottom has formed, no matter how long it might take out there. So there's the bottom pattern. With regard to how long it might take, or is it unusual with regard to what gold is doing, you know, all those types of things. If we take a look at again, and let me just try to find gold in the currencies, because yes, gold does need to move higher in all currencies if in fact it has bottom. And here we're taking a look at the US dollar, left-hand side. Next to it is the euro. Euro formed a nice little hammer candle on August 16th, at bottom of which is 1027.40. Robert, until that low gets taken out, all that the gold price in euros is doing is hammering out a bottom. In yen, which is panel number 3, it formed a nice hammer candle as well on that same day. So the same thing holds true, and the same thing holds true for pound sterling out here. Price today moving lower in basically all the currencies out here. So okay, that doesn't mean we haven't found a bottom. I didn't ever said that, hey, one way to the upside, and we'd never look back or anything along those lines. I'd like that to be the case in anything that we buy, but I just can't go there. So at this stage here, I haven't seen anything with regard to gold price in major currencies, other than to say it's not like it's a huge conviction. Everybody's on board and saying, yeah, we're definitely going higher out here. We just haven't violated, or gold hasn't violated, any of these important hammer candle lows that are out there. Now, Robert, if they get violated, yeah, it could absolutely be a problem, and we'll just simply come back and reassess what it is that we're looking at. In the meantime, what you and I have today, as we speak, as soon as I can find it, is we have a brand new market profile inside of Goldilocks. And that's always a beautiful thing out here. So as we take a look at that daily time frame profile, you're going to see that gold now has a new level of support and resistance. The new level of resistance is 1209.50. The high is 1209 as we speak. The bottom of that box is 1188. First, Robert, it would not surprise me to see price push all the way down to 1188. This is a bearish structured profile, and I'm not saying it's going to. It wouldn't surprise me, because sellers should have control of this entire price distribution area, 1209 down to 1188. And the reason is because the center line of that box is at 1203, closer in proximity to the top. So if price moves lower in US dollars, I'll just be watching those levels of support in euros and yen and pound sterling out there. Again, it doesn't mean that it will. I like the fact that this box formed above the prior box out there on a daily basis. We haven't seen that since February of this year. So it's another signal to you and I that there is a potential change in trend in place for gold. So when I put that together with this pattern here, Stevie's pattern that he created, this proprietary pattern for helping us to identify when markets are making tops and bottoms, this doesn't. That way, we don't have to use the phrase, because it's a BS phrase. It's all before Steve, that what you want to do is you want to, buy lows and sell highs. Well, what's the low you buy? No, you buy the low that forms one of these Rhodes momentum indicator signal patterns out there. It doesn't mean they work all the time, but they work so well that you're trying to go bottom fishing out there. Well, you've got the bottom signal for Goldilocks. And now we've got a new profile to let us know in dollars if we're right or wrong. Close below 1188, and that's a problem. Steve Rhodes with TFNN. We've got another question inside the den, or a couple of them. One about natural gas and one about CGC. We'll be right back to take a look at those.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So a couple of questions that have come in. I see a couple more maybe. by email as well out here. So Peak D wants to take a look at natural gas. Peak, I'm not sure which contract it is that you wanted to look at because we're going to get different views out here. But if we do take a look at October as an example right now, and the question is any short-term or intermediate-term or long-term bullish signs out here. Let's just simply utilize, let's agree to utilize right now the daily contract out here. And if we take a look at the daily contract, what it needs to do in order to get a bullish sign would be to close above the bottom of that profile. That's $2.90 out there. So that's taking a look at it. We have a retracement. There's no doubt about it. But what we don't know is whether or not price can regain a level of support that it should not have. Failed at, and it failed on August 27th, and price needs to get back inside that range, so to speak, in order to give you what I would call a short term. Yeah, price can probably head up to 290 and go test that. But intermediate term, long term, no, I don't, not until we regain that. Now, if we go out to January 2019 out here, and we take a look at its set of profiles. Well, if you were trading that, we use the exact same set of criteria. Price is very close to regaining the bottom of that profile. And the bottom of that profile is $3.07. $3 we'll call 308. You're trading at 307 right now, and 307 and a half basically. So just simply depending on the contract, and if you're trading the UNG, then you got to go in there and you got to figure out what is inside that ETF. And I don't know what it is. It's probably two contracts. I don't know. But the only way to really trade that is to figure out which contracts or contract is inside there, and then come take a look at the profile. So we have slightly different messages depending on which contract it is that we are taking a look at inside of natural gas. So I hope that helps you out. That's about the best that I can do. Mike K wanted to take a look at CGC out here. So let's go look at that. CGC, he says, is a pot play out here. So we're going to go take a look at it. And Mike, Canopy Growth. Okay, so this is one that you took some profits on. You sold most of your position and looking for levels to get back in. So levels to get back in. CGC out here. I'm just on my other chart trying to figure this out. Okay, what you have going for you is the following. And that is, if we take a look at the daily chart out here, you can see that you did get to that Tom DeMark setup 9 count. That's where it made its high. That was on August the 28th out there. So it gave you a pretty nice little signal. Then the very next day, it forms a new profile. Price pulls back, gets inside that box, tests the center of the box, truly the center of the box. That's where both buyers and sellers are comfortable. So if you're looking for a price to get back in, it may have been a couple of days ago as price got to that center line. Price may still get back there. You can see that what we haven't seen just yet is a test of price in Stevie's red/green line out here. And so it looks like that is what's underway. I don't know if it's the line that's going to catch up to price pulling back to line, some combination thereof. But 40.99, 41.51 are the numbers that I would use today. A close below Stevie's red line, green line says 35.60 is game. But at this stage here, there's no reason for me to give you that as the target. I'm saying the 41.50, 40.99 level. Again, that number will change slightly as time progresses here. With regard to ticker symbol CRON, made the same type of top with that Tom DeMark setup 9 count. Now we're seeing a bit more of a pullback. This has a top of its box that's basically matching up with my green line in the 956-ish type area. Now, in this case here, with regard to CRON, it's a wide-ranging bar-ish candle right now. So what the heck's going on there? Because wide-ranging bars are not necessarily something like to buy when they come back to a target area out here. And so volume-wise, let me see. This thing broke topside was 67 million. You're at 43 million today. So I don't know what Kronos Group does, but I say you got to be a little bit more patient on this one. You really should. Let's not use the top of that box yet, 956, which is matching up with my line. Yeah, maybe it's more weed or what have you, but there's something else. Sellers are telling you something a bit more about this one because there is some there is some selling that is going on inside of this. If I look at the volume, I don't know, I didn't look at it before, but the volume inside of Canopy today, and it's an inside bar, you've got 9 million shares, you know. It's no big deal. Last time that it moved down was 21 million shares. So two different tails of the dog out there with regard to both of those. So I think the volume is saying you've got to be careful inside of that ticker symbol, CRON. Let me go switch over to the emails, see who has written in here. I think one Michael put Deja Voodoo 1994. I think maybe, Michael, you're just forwarding for your information. Okay. It's an FYI. Oh, I know what this is here. I've seen this before. This is Tom McClellan, great guy, by the way. But Tom McClellan, he does a lot of analog patterns, and he's got an analog pattern that I saw him talking about this a while back. Where he's taking a look at the, I don't even have to read it, Michael. He's talking about I will read it, but I don't need to read it. You can go read it out there. But he's talking about the similarities between Donald Trump and Bill Clinton. And he's using the 1994 time frame and the 2 years analog, which would say that the market should find a fairly significant top towards today, basically, right? Today, tomorrow, the end of August. And so I know that that's what he's got going, and talks about the similarities of, trying to, I don't know, drain the swamp, so to speak, and all that type of stuff out there. What I will share with you, Michael P., is two totally different markets. Two way different markets. What was going on in 1994 is not what's going on today. And that's what Tom is missing out there. What Tom is not taking into account is where all the money is flowing. And I won't go through that whole process again, but the money is flowing into the United States. We are in one of these markets that is one of the more difficult type markets to trade. These vertical-ish style type markets out there. And that's one of the things that Tom's not picking up on. And the reason is because most of us, if not all of us, don't really have the experience to trade this style market. We can find all kinds of signals to find top, short-term, long-term, and whether it's a Rhodes momentum indicator signal, whether it's a seventh wave move, whether it's a this or it's a that. And the reason that those patterns don't last but more than just a few days out there is because people around the globe have to figure out where to park their money. You want to go park your money in the euro? You want to go park it in the FTSE? You want to go park it in the DAX out there? Be my guest. You want to go park it in Turkey and chase some yields out there? Be my guest. You don't want to do that. You don't want to do not do that out there. Don't chase that. You don't need to chase that. The money's flowing over here to the U.S. That's not exactly the same pattern that was in play in 1994. And that's why I would say that whatever Tom wrote there, bless his heart, that he's wrong on the analog aspect of it. Yeah, maybe the first 2 years with regard to the presidential election cycle, prices moving up towards those levels out here. But we are in two totally, did I say totally? Two absolutely, totally different markets. 8,800, baby, in the NDX 100 and higher. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Just to go back, and Michael, thank you for sending me that article and forwarding that to me, and especially because actually it really just kind of helps here to prove my point. And so I've been trying to set up these charts here just simply so that you can see it. So this is the Dow, by the way. I don't know if it's the Dow or the S&P that he's featuring inside his charts. It doesn't matter. Remember, when we take a look at the global flow of capital out there, one of the things that I've shared with you is that when markets top, we get into a bear market, there's a certain pattern that forms out there. It's called that Rhodes Momentum Indicator signal. It's why I have so much conviction in my message to Bob, who was asking about the gold bottom out there. Because that pattern that's present. And I know what pattern is present before the beginning of a bear market. It does not mean that when every pattern is present, it turns into a bear market. Two totally different things. My cursor right now, by the way, the high in 1994, and Tom's kind of peddling the August time frame, so I don't know which index it is, by the way, was in January of 1994. So in trying to do these second-term things out there, it's want to kind of keep things in perspective out here. And if you take a look at my crosshair, you're going to see that in dollars and in euros and in Great British pounds, the Dow topped out at exactly the same time. That was not the case with regard to the Dow in yen. The Dow in yen actually had topped in 1990 and never was able to take out those highs, not until the big bull run in 1995 out there. Okay, so we have two totally different things. Everything was topping at the same time. Now if we take a look at, let me see if I can get back here. Let me see if I can do this. The Dow hasn't made a new all-time high, not yet, okay? But in euros, we're at a new all-time high this month, the month of August. Let me see if I get back here. We made a new all-time high in August in yen terms, and in Great British pounds, we're at basically almost at a new all-time high right now. Markets top all at the same time. We topped in the U.S. dollar back in January. We've got to go on to make a brand new all-time high in dollars and do it in all these currencies as well, before there's even anything to get concerned about. So I hope I'm at least being able to get my thought across out there and the reasons why I say the things I do and have the conviction that I do. Keep pouring money into your long-term accounts. It is just simply that simple. All right, let's go to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you today?
Steve, I'm doing good. I'm looking at a couple stocks on my watch list, and I'm looking at X, U.S. Steel, and I'm looking at it on a daily chart and a weekly chart, and it looks like we may be a little bit high on the volume, but I was wondering if we may be forming some kind of a bottom. Because on the weekly, it looks like we got down to the 200 period exponential moving average, where that has served as bottoms before. And on the daily, it looks like on my chart, we almost have a hammer, but I just happen to notice the volume may exceed the last low we had a little while ago. But what are your thoughts, and where, what are your thoughts on it?
Sure. Is it a longer-term type of holding that you're looking at? Kind of what?
It could be just a trading position, but possibly it could turn into a longer holding pattern if everything looks good as it's going up.
I think as long as price inside of U.S. Steel stays below 31.37, and 31.37 would be the swing point I'm using from the week of April 30th. As long as it stays below that, even though that level was not passed with volume, that was 69 million shares, and it was passed with 62 million shares, so not too bad. Our price was coming in, that level was 62. Passed with 54. It still could be forming a really great Gartley buy on a weekly time frame. And so that's why I say if it's a longer term holding out here, I'd be patient. I'd be patient because you're below profiles on a daily, on a weekly. On a monthly, it gets you down to about 25.61, and the A to B equals CD is 22.96 out there. So I'm more inclined to say, because I don't have a bottoming signal or pattern on a daily time frame out here. In fact, all the signals here, if we take a look at it and we look at my daily time frame chart, you're going to see these green colored boxes. And we haven't seen, well, we saw one red one. That was the counter trend rally. So the high on August 22nd right now, that's showing to me that it was a counter trend rally at the moment. Not a hammer candle today. Price trading below the bottom of the box, below its red line. All those things are cautionary bad signals out there, at least as a 1:47 in the afternoon. So with regard to U.S. Steel, I'd still stay patient there and watch. Continue to watch to see how things unfold. If there's something else that unfolds, give me a call back, and we can take a look at it together.
Okay. Well, like I said, I'm just looking at different things. I got a watch list here, and I'm looking at possibilities for later on.
Absolutely. Alrighty, you bet. Scott S. wanted to take a look at ticker symbol IGC, and the question was, what are your thoughts on going along this? Have a great Labor Day weekend. I think you got to be patient here. I think you missed that move inside of this equity just because of the gigantic move from $51 cents up to $2. What it did yesterday, Scott, was it formed that Tom DeMark setup trend line, that number 9. We've taken a look at that. We've seen it a couple times on charts out here that we've looked at. And when you get to that can be an exhaustion move in the Tom DeMark type system out here, or at least a pullback. And a pullback in this thing, not $1.80. Pullback would be to about $1.09 out there. So I would not be chasing this right now. India, which this is an India ETF. I don't know what's really inside it. We did take a look at it over the last couple of days, the market breaking out in India, but we've been saying that for a week or two, and that was the time period probably be taking a look at IGC. At the moment, I would just simply sit tight on that one because that Tom DeMark setup trend number 9 count that was out there. Just looking. Hey, by the way, I wanted to let you guys know, you guys, you gals, everybody out there, that tomorrow's show, the normal show from 1 to 2, I'm going to be taping my portion of the segment between 8 and 8:30. So if there's something you want me to take a look at, you can send me an email. I'll try to review it, although the show is much shorter. I'll try to review it for you if I can. But if you're listening at this time, you're going to hear the first half-hour segment. For me, in the second half, will be from Jason Paff, who kicks us off at 8:30 each morning out there. So it looks like I've gotten to all the questions that were emailed. I think there was something else that was sent in by or requested inside the den. Was there? I guess the answer is no. No, there isn't. I don't see it. So if you do have a question, just please let me know as we go into this last segment here in about, we'll go to a break in about 30 seconds out there. So what else do we look at? Oh, I know we should probably look at. What's going on inside the New York Stock Exchange? Well, right now, not much. What do you mean not much? Well, one of the things you and I were looking at, with regard to the short-term topping type signals, still present here as we speak today. You had price moving higher, doing it with less advanced decline oscillator info out there. We had a declining tops, but price oscillator still above zero. It's at 32.97. As price was pushing lower around 10, 11 o'clock, I can't remember the exact time, I kind of peeked at it, and it was sitting right at about the zero level, which is support. You've got the spot volatility index below the 50-day exponential moving average. Lots of liquidity. Plenty of liquidity out there. Dow's off 44, S&P down 2, NASDAQ up 21, the Russell 2000 trying to catch a little fire out there. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's off 51. S&P's down a couple of points. NASDAQ up 20. Russell's up 5 out there. What else to look at out here? You know, that's going to be of help to you. Treasury bonds. Treasury bonds are kind of interesting. As I take a look at them, here's what they're doing. Here's what they're not doing. And I had been short Treasury bonds up until yesterday. And yesterday morning, I went to neutral. And the reason that I went to neutral out here, we knew the level of resistance inside of Treasury bonds. I mean, that level was very clear to see. And this is the area where I went ahead and went short, right in this area up here, because of the prior highs that were in there. So that was a pretty easy call. And the fact that we had a brand new daily profile that had formed as price had hit that. When I say hit that, I'm referring back to the date of August 24th. I had been long up and through that point in time, and then I switched to short. I think I switched to short probably around the 22nd or the 23rd as we were getting close to that resistance level out there. Kept questioning myself because we had price above Stevie's green/red line out there. But then as soon as that profile formed on August 24th, I was able to take a little bit deeper breath because that was another clear indication this was a slightly bearish structured box out here. To say, okay, at least I know where clear resistance is. I already knew it, but now I really knew it out here. And then as soon as price did what it was supposed to do, which was push down into the bottom of that profile on August 28th, even though it's trading below Stevie's green/red line, I was like, okay, that could be the extent of the move out here. Now, the reason why I say could be, wasn't sure, is because price would either have to close below the bottom of that box or close back above Stevie's green line out here. What we've seen take place today is nothing more than that counter trend rally into that level of resistance. So it's trading in between resistance, Stevie's green line, and support, the bottom of that TAS profile. And that is the reason that I'm sitting here neutral right now. It's not clear to me. It might be clear to somebody else, but it ain't clear to me as to which way T-bonds want to go, kind of from a swing trader's perspective. Folks, thanks so much for being here. Have a great weekend. If I don't see you tomorrow at 8 to 8:30, again, that'll be replayed at 1 o'clock. And we'll look forward to seeing you on Tuesday. Be safe. Have a great holiday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.